Pablo, good to see you. How you doing? How you been? JP, good to see you, swear brother. How you doing? Evening. Scott, good to see you as well. How you doing? How you been? Tor, good to see you as well. Evening. How you doing? How you been? What's up, Miles? What's up, CMF? Kerry, good to see you as well. How you doing? How you been? Hi, Miles. Artistic, good to see you as well. How you doing? How you been? Scott, good to see you as well. How you doing? Good mental. I'm doing great as well, Scott. George, good to see you as well. Hi, Miles and CMF. Let's go. So how does this table coin groove a dollar? Or RLUSD. Hello, Miles and family. Comatose, good to see you as well. How you doing? How you been? Miles, how are you, brother? I'm doing great. Theos, good to see you as well. How you doing? How does a stable coin go over a dollar? A stable coin is not supposed to go over a dollar unless it has a limited supply and the inflow is too much. Good evening, Miles and CMF. BullXRP, good to see you as well. How you doing? Hi, brother. Camel, good to see you as well. How you doing? How you been? Hello, Miles. Good evening. Cali, good to see you as well. How you doing? How you been? Miles, XPR protocol. XPR is not what I'd be essentially putting my focus on right now. Stick to the financial projects is what I would say. Now, let's do a breakdown of essentially what we're going to be going through on tonight's live. A lot of things have been happening. And the market is pretty much all over the place. But there are reasons of why the market is all over the place, which we're about to go through on tonight's live. Yesterday, as I was mentioning, Biden's group of circus freaks can pretty much do anything. From now until January 20th, anything could pretty much happen inside the market space is what I was talking about. But let's do a breakdown of what we're going to talk about on tonight's live. So on episode 228 of the CMF Live, we're going to be talking about why is the market essentially down? What's the reasonings of why the crypto market could be down? There's multiple reasonings, but the reasonings don't make so much of a sense, but we'll go through every single one of those reasonings on tonight's live. We're also going to be talking about on tonight's live regarding Hester Pierce. So there is some, why is this happening type of news. There's also some positive news to go through on tonight's live. So we're going to go through some news from the SEC, which is actually positive for the crypto space, from Hester Pierce, on what's going to be happening inside the SEC moving forward in 2025 on Trump's policies. Then we're also going to be talking about how the SEC has given a green light to essentially hashtags and Franklin Templin's ETFs. We're also going to be talking about tonight's live regarding Deutsche Bank, essentially Deutsche Bank teaming up with a particular crypto asset to build something on it. I'll reveal what the crypto asset is once we get to that news. We're also going to be talking about another company coming forward and adding Bitcoin to their treasuries. About $1 million is what they're adding. We're also going to be talking about another company based out in Japan who has raised $31.9 million to invest into Bitcoin. We're also going to be talking about tonight's live regarding no need to panic. A message coming from Grayscale. No need to panic regarding what's happening inside the market space. It's a strong message coming from Grayscale, to be fairly honest, and it's true. There's no need to panic whatsoever. We're also going to be talking about the EU on tonight's live regarding the MiCA regulations, which is coming to a start essentially at the end of this month. We're also going to be going through news topics like the US economy on tonight's live. Is a recession expected next year? Or can a recession essentially be side-curbed, for example? We're also going to go through news topics on tonight's live regarding the matters of Cathy Woods, the 21 ARK Shares essentially CEO, coming out and saying that the Trump elections and Trump becoming president onwards on January 20th is actually going to bring so much positive change inside the market space, and a lot of money is going to be flowing inside as well. We're also going to go through news topics like the US courts and the Ripple case. We're also going to go through news topics like how the corporate influence is creeping up and that communities are reacting to BlackRock's ad. BlackRock has came out with an ad today, which a lot of Bitcoin maxis did not like. We're also going to be essentially talking about tonight's live regarding Ripple, in other words, on XRP and the Japanese banking systems. So, mixture of news to go through on tonight's live regarding why is the market down, perspective from Grayscale, BlackRock, Franklin Templeton, Hashdex, 21 Arc Shares Invest, Hester Pierce, SEC, Trump news, world news in general. So before we go for any of those news topics, and the first one we are going to be covering on tonight's live is why is the market down? Multiple reasons. So, but before we go for any of those news topics, I just want to say to everyone watching right now, welcome to the CMF Live. This is episode 228 of the CMF Live. It stands for Crypto Mouse Family. And on this live, you can tune in Monday to Friday, 11:25 p.m. UK time onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding how the world is transforming into a digital space. We also do Q&As on this live as well, which means if you do have any questions, put it down in the comment section. I'll be more than happy to answer any questions you may have. And a disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, if you're watching this for the first time ever, welcome to the CMF Live. If you're regular, let's go CMF. And also, thank you so much to everybody that's retweeting this live right now on X. I'm getting notifications. Thanks so much to everyone on X that's retweeting this live, who's putting a like on this live, who's also putting a comment outside the live on X. And thanks so much to everyone on YouTube who's watching and also liking the live as well. Now, the live show has officially started. Before we go for the first news, let's go straight inside the comment section first, and then we go straight into the first news. So, let's see where we were at. We were at here. Okay, we were here. Yeah. Morning, Miles of CMF. Shelly, good to see you as well. Morning. How you doing? How you been? Dennis, hi, Miles of CMF. Good to see you as well. Dennis, how you doing? Thanks. Let's go, Scott. Evening, brother Miles and CMF family. Funky brother, good to see you as well. How you doing? The market is perfect for me. Also for me too, I'll be honest. Evening, Miles and CMF. Joe, good to see you as well. How you doing? How you been? And then you get a weird one inside the comment section. Good evening, Miles and CMF. Ring Feather, good to see you as well. How you doing? How you been? Hello to my YouTube, CMF. How are you doing? I'm doing great, Scott. Let's go share the live. Facts. Hello, Miles. T, good to see you as well. How you doing? How you been? Good evening, Miles and family. Ian, good to see you as well. How you doing? How you been? Gary made deal with him. When he leave, he's going to get a lot of money from different exchanges and cryptocurrencies. And general, I hope he goes to jail for it. I hope Gary Gensler does go to jail as well, because Gary Gensler has committed a lot of fraudulent behavior as an SEC chairman. An SEC chairman is supposed to be somebody that's heavily respected inside of the market space, because that man is supposed to, or that female, whoever's going to be chosen essentially to run the SEC, should be in charge of protecting investors, but not going against them or suing companies and fraudulent behavior movements, which is what Gary Gensler has done. So I understand fully, and he should be in prison. Sorry, Miles, I don't mean to be rude, but every night I fall asleep before saying good night. I don't mean to be rude. No problem, Funky brother. I understand completely, because it is, I do finish quite a bit late. Don't worry. Just way too tired nowadays. No problem, Funky brother. I appreciate that comments. I love this market. You can buy as much as you want. Also facts. Absolutely. Yeah, dump always is, yes, dump is always market. Well, I did say, look, I was saying yesterday, for example, that anything can happen inside the market space between now and January 20th before Trump takes his seat. I did say anything can happen. I was saying this yesterday. I was saying this throughout the whole week, and the week before. And the week before. Honestly, we can't wait to see the back of Biden and the weasel Gary bunch of, yeah, I understand fully. Funky brother. Even Miles of CMF. Manny, good to see you. How you doing? How you been? Miles, any news on the CMF merchandise? It's in progress. Let's go, Ian. Is Shiba partner links? No. And why is stablecoin more than $1? You said a stablecoin could never be more than $1. A stablecoin can be more than $1, but only if it has a limited supply and there's a fluctuation in terms of the amount of inflow coming into it. But other than that, it shouldn't be over. But it's always going to stabilize itself back to $1 regarding stablecoin. Miles, what do one do if he don't have any money left to enter the markets? Sell a kidney. Is what my recommendation would be. Obviously, that's not my recommendation any sort of a way. Do not sell your kidney to buy when the markets are down. Miles, I wasn't attending the lives when you decided to do Monday to Friday. Was it your idea or JP's? It was my idea, but I had influence from members of the CMF. I have nothing left to my name. Camel, good to see you. Hello, do you think XRP will rise slowly or will it go mental overnight? It will rise slowly, in my perspective, because it has to rise with regulations, because XRP will thrive. XRP, XLM, XDC, HBOR, Cardano, these are types of projects that will thrive on the regulations. So once regulations are in, then there's no stopping them in terms of the adoption rate happening. Because then institutions and banks are more likely to enter the market space once the market is regulated, rather than being some sort of a gray scale, rather than being some sort of gray area for them. But rise slowly is what I would say. Overnight situations can happen as well regarding, fluctuations of price movements happening. Market goes suddenly up and starts jumping up and up and up and so on. It's a possibility as well. Keep both outcomes on the table. How has your day been, Miles and CMF? Lino's been great. Good to see you as well. How you doing? How's your day been? Gensler is like a troll stopping you crossing the bridge until you pay up. That's an interesting way to put it. Miles, I'm just kidding. I know, JP, you're kidding, brother. Hello, Miles. Short term, up, down, or sideways? Cass, good to see you as well. How you doing? What I would say is from between now until January 20th, market's going to be all over the place because the freak shows from Biden's circus are still active. I thought about it. Greetings, Miles on CMF. Happy Friday. Good to see you as well, Ray. How you doing? How you been? When XRP gets to $10,000, consider variable change for the time being. Even I've been scared. Even I being scary of the market. How going green and I can't buy any more low. Let's go, Kelly. So let's talk about why the market is the way it is today, especially. A lot of perspectives on this matter. We've got so many, expert perspectives, analyst perspectives, company CEO perspectives, analysts even from Grayscale's perspectives, 21 ArcShare CEO perspective. So let's just start off with this one first. Why is the crypto market's dip isn't the end of the bull market? The dip that we're having now isn't the end of a sort of a bull market, because leading up to January 20th, Trump is taking position. According to experts, after recent liquidations and falling prices, settling the stage for a longer crypto winter, or could this be a breather before another full run? So is this essentially the end of everything and crypto is going to start sliding sideways from now on? Or is this just a breather before the next leg up? As the year winds down, the crypto market seems to be taking a pause after a prolonged bullish run, with the global essentially market cap shedding more than 6% to settle around $3.47 trillion as of December 20th. Bitcoin has slipped below the crucial levels of $100,000 mark, trading at $96,680. As of this writing, a drop of nearly 3.5% in the past 24 hours. Ethereum, the second largest crypto by market cap, has also experienced an even essentially sharper decline, tumbling 6% over the same period and accumulating a weekly losses of 15%, leaving it at 3,400 levels. The decline hasn't spread the rest of the markets either. Top 100 altcoins recorded losses ranging between 10% and 20% when it came to altcoins, while meme coins, known for their wild price swings, were hit the hardest with an average sector-wide decline of 12%. And adding to the chaos, the future markets revealed staggering liquidation figures. Over 374,000 traders were liquidated in the past 24 hours, totaling a $1.37 billion of liquidations, according to CoinGlass data. Of these liquidations, $1.13 billion came from long positions, a clear sign of overly optimistic bets gone wrong. Bitcoin alone essentially accounted for $320 million in liquidations, mostly from long positions, while Ethereum saw $308 million wiped out and $263 million tied to longs. A closer look essentially at the open interest, the total value of outstanding futures and contracts suggests that the market may be entering the bearish phase. But is it? Bitcoin's open interest had climbed steadily over the past few months, rising from $32 billion in early October to essentially $68 billion by December. However, this has now dropped to $62 billion as of December 20th, conceding with the sharp price declines. Typically, when both open interest and essentially prices fall, it signals a bearish moment. As it reflects traders closing position and reducing exposure during market uncertainties. The sharp correlation in the crypto markets can be attributed largely to the US Federal Reserve's latest interest rate decisions and its accompanying commentary. On December 18th, the Fed announced its third interest rate cuts, reducing the federal funds rate by 0.25% to 4.5%, which could have been good news. While this move was widely anticipated and brought such a reduction for the year to 1%, the central bank's messaging carried a more cautious tone. Fed officials cleared that only 2 additional cuts are planned for 2025, and many further adjustments will depend on the inflation trends and overall economic conditions. The Fed's measured approach reflects its ongoing struggle to control inflation, which is expected to stay above its 2% target until at least 2026. The announcement sent shockwaves through the financial markets, particularly risk-sensitive assets and crypto and stocks. US equity markets reached sharply, with the Dow Jones essentially and Nasdaq 100 both tumbling over 2%. At the same time, bond yields surged as investors sought the safety of treasuries. The 10-year essentially yield climbed to 4.55%, while the 30-year yield hit a 4.7%. Meanwhile, the US dollar's index spiked to 2-year highs, further tightening financial conditions and adding pressure to global markets, including crypto. Bitcoin climbs above $100,000 earlier this month was undeniable a milestone, and essentially Ethereum's rally past 3,500 similarly initiated by widespread optimism. However, such a euphoria, essentially sentiment, often prompts traders to lock in profits, especially when markets exhibit sharp corrections following extended rallies. A risk appetite wanes and traders adjust their positions. This time was no different. As investors shifted towards a safer option like treasuries and cash, crypto faced a dual blow of reduced demand and panic in terms of selling. The sell-offs quickly escalated, triggering widespread liquidations as leveraged positions were forcefully unwound in future markets. The cascade effect of these essentially events drove prices sharply lower, plunging the crypto markets firmly into a correction territory. The recent turmoil in traditional financial markets is spilling into the crypto space, with Bitcoin feeling the brunt of microeconomics and pressures that have left investors scrambling. A closer look at the situation through the lens of essentially the Kospi letters analysis sheds lights on how rising volatility, changing market correlations, and the broader microeconomic conditions are shaping the current narrative for Bitcoin and the crypto asset space. The volatility index, the VIX, often referred to as the fear gauge for traditional markets, has essentially surged nearly 100% this week, suggesting heightened uncertainty. This surge coincides with the Federal Reserve's hawkish stance, which, while cutting the rates on December 18th, suggested a lower pace of cuts ahead. Rattling risk assets, including Bitcoin as higher for long rates, have made it a safe haven investment like US Treasury bonds increasingly attractive. The 10-year Treasury yields has now climbed to 4.5%, with fears of the rise towards a 5% level, a threshold that previously triggered corrections on both entities and crypto markets. Diving deeper, Bitcoin's performance can often be understood in relation to its correlation with traditional markets, such as traditional financial indices. Earlier this year, Bitcoin shared a strong positive correlation with the Nasdaq and the S&P 500. Peaking at 0.9%, essentially, and 0.86. In June, for example, this meant Bitcoin largely moved in tandems with tech stocks and benefiting from the same risk and sentiments. However, in mid-July, this correlation flipped to essentially 0.87 and 0.86, signaling a rare essentially where Bitcoin briefly acted as a hedge during market equities and weaknesses. Most recently, as of December 19th, these correlations have softened to 0.57, where the Nasdaq and essentially with the Nasdaq and a 0.38 for the S&P 500. While Bitcoin still reacts to macroeconomic shifts, this price movement have started to reflect unique pressures such as spot ETF inflows and outflows and other crypto-related such developments in the US. In the short term, Bitcoin faces a serious hurdles. Rising essentially treasury yields are diverting institutional capital towards safer assets, while equities are struggling to find support aimed heightened volatility. However, the softening correlation between Bitcoin and traditional indices suggests that the crypto market is not entirely beholden to broader market essentially trends. This decoupling, if it continues, could allow Bitcoin to essentially curve out a more independent narrative, but only if it can withstand the current microeconomic storms. Experts remain divided on Bitcoin's short-term trajectory, but there's a common thought. This correlation, while unsettling, may not signal the end of the bull market. One expert draws a historical parallels to provide perspectives. In December 2020, Bitcoin dropped to 12% after a massive rally, and only to surge essentially to 136% within the next 23 days. He points out that the current 13% dip follows a similarly strong fourth quarter performance. While another expert warns that a further correlation of 10 to 15% remains possible. He underscores that there's plenty of fuel left in the tank for Bitcoin and the broader markets. Adding to this perspective, one analyst essentially says that the corrections during price discovery phases are both common and necessary. Price discovery corrections tend to last a few weeks, and there are usually up to 4 in a bull market cycle. According to this analyst, this first such correction in the current cycle, making it an essentially optimal reaccumulation opportunity within the high probabilities of price reversals to the upside. Another analyst takes a slightly different angle, focusing on the potential for consolidation. He notes that Bitcoin's dip below $120,000 triggered a sharp decline in altcoins, but such a volatility is expected in high growth market spaces. These are opportunities, and these drops will continue to happen, he says. From here, he anticipates Bitcoin consolidating while altcoins essentially potentially seeing another rally. Beyond these short-term assessments, micro developments signal a longer-term opportunities. Bitcoin Magazine, for example, reported that the group, essentially BPCE, a major French bank, today announced with its 31 million users and $1.5 trillion in assets, has received approvals to launch a Bitcoin and crypto investment services. The steady integration of Bitcoin into mainstream financial ecosystems, coupled with its increasing accessibility to retail investors, could act as a counterweight to market fears. However, risk remains, and elevated treasury yields, macroeconomic uncertainties, and rising volatility in traditional markets continue to pose challenges. Traders and investors should exercise caution, as further volatility can result in more dips. Essentially trade wisely and never invest more than you can afford to lose. So, many perspectives from analysts and experts, and even the French banking news coming out with $1.5 trillion on the assets getting involved in the Bitcoin Ethereum space and so on, all the crypto space in general. Look, they're basing it on many factors. They're basing it on the Fed coming out and saying 2025, they're only going to do 2 rate cuts moving forward, or they're going to pause rate cuts. That had a bad sentiment inside the market space. But that was a few days ago, to be fairly honest. The market already reacted to that. Then they're saying, well, the Fed came out and said, 0.25% rate cut, which is good. But then the Fed said they're never going to hold Bitcoin and it's never going to change, which was bad. But then again, that was also a few days ago. It was yesterday, or the day before yesterday. But then they said, essentially, this is just a consolidation phase. This is just, the market going through its phases before it takes off for another leg up. It seems very all coordinated. Look, what I can say is, I did say throughout this whole past 2 to 3 weeks, I've been saying that anything can happen between now and January 20th inside the market space. And then I said after January 20th, the first 100 days are going to be crucial, because that's when Trump takes action. That's when we have a new SEC chairman, a new CFTC chairman. We're going to get apparently rid of the FDIC, which controls the banks and tells them not to work with crypto companies. We're also going to get rid of Caroline Crenshaw, who's also a worse person than Gary Gensler in the SEC. We're going to get regulations. There's a lot of things happening in 2025, which is all incredible news. But I did say for the past 3 weeks, between now and January 20th, anything can happen because Biden's freak shows are still in control. And then we also had the government's shutdown situation. America's government is going to go into a shutdown, which was announced yesterday. But today they've announced they've passed the bill so it won't shut down, which added more onto the market space. A lot of factors in play. But again, consider this. From now until January 20th, anything can happen. After January 20th is when the market starts showing positive reactions. And it's not just my perspective. Today, we're going to talk about 21 ARC shares, essentially 21 ARC shares CEO's perspective, who shares the same perspective as me. Or we're also going to be talking about Grayscale's perspective, who also shares the same perspective as me. Or JP Morgan's analyst perspectives, who also share the same perspective as me. Moving forward, it's all brilliant and amazing in 2025 under Trump. Beforehand is when things can just go sideways, because the freak shows are still essentially in control. Because they're blaming it on the Fed coming out and saying we're pausing rate cuts. But that was a few days ago. Why is it reacting today? They're blaming it on essentially him talking about the Fed talking about, Bitcoin, we're never going to buy it, we're never going to hold it. But that was also a few days ago. Why is it reacting today? There's a few things they're mentioning, but it was all a few days ago. Why is it reacting today? Because it reacted a few days ago and then stopped and then drastically reacted today. The freak shows are still in control. Between now on January 20th, anything can possibly happen. They're announcing that government shutdown, which essentially today they passed the bill. So that's canceled. That's never going to happen. Then there's a scenario of, Ukraine is still getting funded and they're trying to missile essentially Putin. A lot of things can happen between now and January 20th. But after January 20th is when things start going on the right path inside the crypto space. The first 100 days are going to be extremely crucial. But from now, between now and January 20th, it's a complete circus show. As I've said previously. But again, my perspectives are shared in the same way that essentially Grayscale matches my perspective and 21 ARC shares matches my perspectives, which we're going to go through on tonight's live. But now, moving on essentially from the many perspectives inside the market space to a very coordinated, drastic drop, and they're blaming on things that happened a few days ago. And someone just saying, well, this is just, a phase that the market had to go through to get ready for the next leg up. A very coordinated phase, to be fairly honest. But Hester Peirce is what we're going to be talking about. Hester Peirce hints at the SEC's potential support for crypto ETFs under Paul Atkins. This is good news, and it shows signs that the SEC is already starting to change for the better. Because Gary Gensler's out the door January 20th. He's already said he's out the door. And the SEC is showing signs. Hester Peirce, the US Securities and Exchange Commission, is preparing for changes as the incoming chairman, Paul Atkins, who's going to replace Gary Gensler. Hester Peirce has indicated that the transition could lead to a more favorable stance going forward in 2025 on stalled, essentially crypto-related applications, including Bitcoin and Ethereum ETFs and other ETFs. So all the ETF filings that are in pause because Gary Gensler couldn't be bothered to do his job are all going to be looked into with a new SEC chairman, and they're all going to be coming and passing, which matches what, who said? Eric, the Bloomberg ETF specialist analyst, who's always been right inside the market space when it comes to the ETF space, because he's a Bloomberg ETF specialist analyst. Hester Peirce has indicated that the transition could lead to a more favorable stance. Hester Peirce also expressed confidence in a more streamlined decision-making process, essentially with a new SEC majority. In an interview with CoinAge Media, she addressed the feasibilities of an in-kind spot Bitcoin and Ethereum ETFs under incoming administration. Previous disagreements under Gary Gensler's leadership centered on settlement methods. The Gensler-led SEC favored cash settlements, where payouts are made in US dollars. However, issuers advocated for in-kind settlements, which allow investors to receive payouts in the underlying cryptocurrencies, which basically means the new SEC chairman coming into power, Paul Atkins, he's going to be changing some things around. When a company goes up against the SEC and has to pay some sort of a fine to Gary Gensler's team, they have to pay it in US dollars, cash. But with the new upcoming SEC chairman, if there's a case with the SEC, if it's SEC versus Ripple, SEC versus Ethereum, SEC versus whoever, and the case gets to a dismissal or a settle, and there has to be some sort of a fine that needs to be paid to the SEC, under the new SEC chairman, the law is probably going to be that they have to pay the fine in that asset. So if Ripple has to pay some sort of a fine for the settlement of this case to the SEC, they no longer have to be paying it in US dollars. They can actually pay it in XRP to the SEC. This is one example of a case of the SEC. This method is seen as offering a better value for investors because you're not selling, because the company like Ripple doesn't have to sell XRP to pay essentially the SEC a fine. They can just pay the SEC in XRP. This method is seen as offering a better value for investors. Hester Pierce also noted the potential for staking features in Ethereum ETFs. That's also coming to Ethereum as well. All the ETFs that were filed with Ethereum, with all these companies, they're all going to refile with staking capabilities because that's what gives Ethereum an edge over Bitcoin. As I said previously, Ethereum needs staking capabilities as an ETF to be considered a viable asset for any of these institutions. And she said there's going to be a refiling, what I said about 2 months ago, which could provide additional yield to investors. Despite regulatory resistance to staking features, some firms are preparing for potential approvals. Bitwise, for instance, acquired Adstan, a staking service provider, to expand its offerings for Ethereum ETF clients. Already, institutions are positioning themselves for 2025, for a Trump presidency, for a new SEC chairman. Institutions are already positioning themselves. The acquisition reflects the industry's anticipation of a more flexible policies under the new SEC leadership. The expected changes at the SEC come aimed at broader regulatory challenges for the crypto industry. Operation Choke Point 2.0, an alleged federal initiative, has drawn criticism for pressuring banks to limit services to crypto companies. This initiative has impacted firms like Silvergate Bank, which ceased operations, and Custodian Bank, which faces operational constraints at the moment. Crypto advocates, including David Sachs, are calling for an investigation into Operation Choke Point 2.0. Industry leaders believe federal policies beyond the SEC also require attention to support the crypto market's growth. So, as you can see, between now and January 20th, anything can happen. After January 20th, first 100 days are going to be absolutely crucial. Institutions are already preparing themselves. According to Hester Pierce, an SEC commissioner, they're already preparing themselves for a new SEC chairman. They're essentially also preparing themselves for their new filings for their ETFs. A multitude of ETF altcoins should be happening under a new SEC chairman. And any cases against the SEC will be settled in the cryptocurrency of that company. So if it's Ripple versus the SEC, then the settlement should be in XRP, not in cash, as Gary Gensler intended, because he's leaving and a new SEC chairman is coming to replace him. Which Hester Pierce said, it's better for the investors because then the company itself doesn't have to sell the assets and pay back in such US dollars, which makes a lot more sense. But as you can see, the world is preparing for a bullish momentum inside the crypto space in 2025 under Trump presidency in the first 100 days. And that has not changed. As much as they want to throw shade on the market space, as much as Jerome Powell wants to make stupid speeches, as much as the Biden administration want to do some sort of a government shutdown, because they won't print money to save the US government, but they'll print money to send to Zelensky in Ukraine. A lot of things. But the circus freak show is going to come to an end. The circus freak show in America by January 20th is going to come to an end. And after January 20th, the US will be the greatest country pretty much on planet Earth once again, and the greatest market space. My only fear was a while ago, which I revealed a while ago, was I hope they don't collapse the market on Trump's head on purpose, because knowing this freak show administration, the Biden administration, anything's possible from these freak show people. That was my only concerns a while ago, that I hope they don't collapse the market and milk the country dry before they hand it over to Trump. But 2025, looking extremely positive. Institutions are lining themselves up right now. Now, before we go through the next news, which is also positive for the market space, let's go inside the comment section first. The next news is regarding Franklin Templeton and hashtags, which is also another positive news coming from the SEC. It's showing that there is already change happening in the SEC because Gary Gensler is out the door. It doesn't matter what his perspective is anymore. He's out the door. But before we go for the next news, let's go inside the comment section first. let's see what's happening there. As I said previously, this is a live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer any questions you may have. Miles, what do you do? Okay, let's see where I was. I was here. Okay, here we go. Even I've been scary. No. Okay, here we go. The Biden and this administration, were they coming up with over here? You probably don't know yet, is ridiculous. Yeah, the Biden administration. Yeah. Hello everyone, just logging on. What have I missed? Denise, good to see you. How you doing? Quite a bit actually, Denise, but I'll go through that towards the end of the live. NCT Polyswarm top pick for 2025. Bull on 50x. No more money. Stick to the financial projects. It's better for you. If you want more money, not financial advice and sort of way, not financial advice. Good morning, Miles and CMF. Ghost Boner, good to see you. How you doing? How you been? Evening, Miles and CMF. Pure, good to see you, brother. How you doing? How you been? Anybody that makes a smart comment will be deleted and unblocked. Hello, Miles and CMF. Anna, good to see you. How you doing? How you been? Anybody that makes smart remarks will be deleted or blocked. Yeah. Good day, Miles. Let's go, Mike. How you doing? This is my first bull run. It's a bit underwhelming so far. Rachel, no problem. I'm here to guide everyone. Good evening, Miles. David, good to see you. How you doing? Good evening. No, I said previously it's a circle jab. It's a circle job. No, it's not the fears. I don't listen to the BS. There's a reason behind the market drops. Yes, exists. Exactly as coordinated. It has to drop to get rid of the rats, pretty much. But you know what's interesting as well? As the crypto markets dropped slightly, stable coins got strengthened. And treasury bonds got strengthened as well because they have to purchase more for the stable coins to be able to print more. So which means as the markets were dropping, what was actually climbing and doing better for itself was USDT, USDC, and RLUSD. Ripple's new stablecoin was actually doing quite good movements, I'll be honest, because they're stable coins. They have to react in these times and moments. That's where people will sell their profits to. Miles, this is a really stupid question, but I give a trader 5,000 USDT and he said we would get liquidated at 82,000 on BTC and on MEXC. He said that he is fighting with them now because we got liquidated around 88,000. Addy, why did you give a trader 5,000 USDT? Addy, why are you giving out free money of your own money to random people? You shouldn't do that. There's no advice in any sort of a way. It's just personal preference for myself. I would never give out 5,000 USDT to a random trader on my behalf to go up against MEXC exchange. I think you just got scammed, brother. Unless you know the person. If you don't know the person and you can't reach him, and personally you can't reach him, in other words, not just through a video call, then in most cases you probably lost that money. At least you recognize it. The last bull run, I was new to crypto. I probably lost literally 50 to 60,000. I did not realize what I had, and now I should take out money. You are doing the correct thing by researching and connecting with folks that understand it a little better. Also, someone you can trust. Yes, let's go, Scott. Hi, Miles, the CMF Stormy. Good to see you. How you doing? How you been? Any smart comments on this live, you will be deleted and blocked. Yes, let's go. I know your opinion on XLM, XDC, ACH, Algo, and HBAR. Has anything changed with you? No, still the same opinion. And XRP as well, still the same opinion. When Gary Gensler going out from the office, he pay by XRP whatever he has to pay for the past. Well, it should be settled while he's still in power. As the new SS chairman, the new SS chairman will most likely be the one dismissing this case and settling it. The mods have Miles's back. Let's go, Scott. The US is the best country in the world. I've been here for 25 years. I've built 3 businesses here. There's nowhere on the planet you can do that. I agree. Sorry, Coinbase or Ripple was always ahead of the game, but people thought they were sitting on the sidelines, and look where they are now. Facts. I said this last year. I said Coinbase will become the #1 exchange in the world. Last year I said this. I said eventually, not overnight. I said eventually Coinbase over the years will become the #1 crypto exchange in the world. And I said because Coinbase is an American company. America is the biggest market space in the world. And I said Ripple will also become the biggest company in the world, also because it is American, and it's because it's going to be an underlying asset. And that will happen because I'm never wrong. Maybe. Nope, never wrong. It's not because I'm cocky, it's because I'm very proud of the wisdom God's given me. Very happy about that. And time has shown that. Now, the SEC. The SEC gives the green light to Hashdex and Franklin Templeton's Bitcoin Ethereum ETFs. As the cryptocurrency markets wobbles under the effects of strong volatility, an encouraging new light shines on the horizon. We're already seeing signs that the SEC is changing for the better. The SEC and the American regulators, often seen as unyielding, as it essentially has approved the first ETFs combining Bitcoin and Ethereum, a streak at essentially advancements that could well redefine institutional access to these digital assets. The SEC, Securities and Exchange Commission, long perceived as the strict enforcer of digital assets, has just broken the ice. Two ETFs combining Bitcoin and Ethereum, developed by Hashdex and Franklin Templeton, have received its long-awaited approval. This gesture marks a major advancement for institutional investors, offering simplified access to the two largest giants of cryptocurrencies. The Hashdex and Nasdaq Crypto Index US ETF and the Franklin Templeton Crypto Index ETF now enrich the financial landscape. Franklin Templeton, with its legendary expertise and asset management, has overcome regulatory hurdles thanks to strict compliance. On its side, Hashdex is already essentially a key player in the crypto universe, benefits from this approval to bolster its credibility. This decision does not arise in a vacuum. The volatility of the crypto markets recently reached new heights, with massive losses occurring for 24 hours. Bitcoin slipped below 96,000, while Ethereum fell to 344,000. Yet this announcement offers a glimmer of hope, reminding us that regulation and innovation can coexist. The licenses granted to Hashdex and Franklin Templeton fit together into a broader trend. Bloomberg analysts had predicted these double approvals, solidifying the idea that Bitcoin and Ethereum ETFs represent a streak step for the sector. But this also opens the door for other players like Litecoin, often seen as a light Bitcoin, could be the next on the list. With its positioning as a commodity and its characteristics derived from Bitcoin, analysts see it as a serious candidate. However, all is not yet won. Assets like Solana and XRP remain mirrored in areas of regulatory uncertainty, but not for long. The SEC, under the current leadership, is still hesitant to consider them as eligible products, but a change in direction could be on the horizons in 2025 if Paul Atkins, prominent of more lenient regulations, were to take the reins. For now, this approval is a strong signal. Cryptocurrencies are no longer an outcast of traditional financial systems. They are evolving towards institutional legitimacy. And even through the turbulence remains, the green light given to these ETFs shows that the crypto market is gaining ground, and not only portfolios, but also in the corridors of power. It is true. And that essentially institutions are coming around. It is true that Paul Atkins is going to bring some truth to the matter, but also it is showing signs that the SEC is changing. Gary Gensler is out the door, and it's showing signs already. The SEC approving the first ever combined Bitcoin and Ethereum ETF together. It took them so long to approve one Bitcoin ETF, never mind in one Ethereum ETF, but now combined ETFs are happening out of the SEC. So even though Gary Gensler is incompetent and a weasel, I think the SEC has made it very clear that Gary Gensler is out the door, and we're already making some changes. The changes are already happening in the SEC. Now, moving on essentially from the SEC to Deutsche Bank. Deutsche Bank is teaming up with this Binance-listed altcoin to build its own blockchain. Before I review which crypto project Deutsche Bank is using, let's go to the comment section first. As I said previously, this is a live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer the questions you may have. So let's see where you're at. We were at here. The US is the best. Yes, I agree. Right. Facts. Right. And everybody in America was going under, but they had no idea who was behind these companies. Facts. No, I think you were wrong about the stable coin over $1. Miles, I've been with the trader for 18 months, learn how to trade and read the charts. So I did trust him. But when he put it into BTC at 10x, anyone can do that. Anyone can do that? Yes, anyone could put 10x trades on Bitcoin. You didn't know that? On any exchange. If you want to do futures trading, anybody can put 10x on Bitcoin. It's not recommended, but anybody can put 10x on Bitcoin. Adi, I've been with the trader for 18 months. That's good. You learn how to trade and read the charts. So you did trust him, but he puts it into BTC on a 10x. Anyone can do that. Anyone can do that, yes, but you still shouldn't trust random people, even if you have been with them for 18 months. In this world that we live in, your own family members will turn on you, and you've trusted someone to give them 5,000 USDT to trade on your behalf. If he's been teaching you, if this random person, this trader, has been teaching you how to trade for 18 months, why didn't you trade that 5,000 USDT by yourself and did 10x on Bitcoin if you wanted to? You shouldn't trust random people. Honestly, in today's world and society, family members will turn on you, but you trusted a random person you've known for 18 months and given them 5,000 USDT to trade on your behalf. Why would you do that? You could do that yourself. Anybody can put 10x on Bitcoin. See, this is why I say to CMF members that before you do mistakes like that, come to me. I don't charge any money. Everybody knows this. I've never charged a single money for an opinion. No financial advice, but I don't charge money in general, but for an opinion. I've always said to any CMF member, I've always said this. Before you do something that you're unsure of, come to me and say, Miles, I'm going to do this. Do you think this is okay? Do you think this makes sense? Do you think I should trust this person? And I will always tell you what my opinion is. And I would have told you from the start, no, stupid mistake to make. But I've always said to people as well, inside the CMF, once you do what you're supposed to do, don't come to me afterwards and say, I did this, because it's going to be difficult for me to help you out. Obviously, I want to help you out, but I sincerely hope, Adi, that whoever this person is that you gave the 5,000 USDT to is a genuine person. I hope he's a genuine person and he pays you back the money. I hope he genuinely, pays you back the money. But knowing today's society, you can't even trust your own family members. Your own family members will turn on you. And you gave 5,000 USDT to a random person that you've known for 18 months. For him to do essentially 18, for him to do a 10x Bitcoin trade for you. Even though he's been teaching you for 18 months, you couldn't do the 10x Bitcoin trade by yourself. Bad move. This is why I say to all CMF members, always come to me first. Whenever you're about to do anything stupid like that, come to me first and say, Miles, I'm going to be doing this and that. And I will tell you my honest opinion. And I will told you that's a stupid move. And I don't charge a single penny. I've never charged anyone any money. You can call me. I've always said to people in the CMF, you can call me, you can message me, you can do video calls with me. I don't charge a single penny. So you had many options to let me know beforehand. But you didn't, and now you've did that stupid act, and now you're stuck in it. I hope genuinely you get that money back. Genuinely, I hope you get that money back. But never do anything stupid like that ever again. And if you are about to do another stupid act, come to me first. And I'll tell you, it's a stupid move. Don't do that. Don't ever give anybody inside the crypto space 5,000 USDT. Bad move. Hi, Miles and family. Alex, good to see you as well. How you doing? Hi, Miles. How would you spend 1,000 over XRP, XLM, XDC, and HPRO? I know, no financial advice, just your opinion. XRP, XLM, XDC, HPRO, how would I spread that 1,000? Four-way. I'll actually put 40% XRP and then split the rest three-way is what I would do. 40% XRP, split the rest three-way. It's not recommended to do that way, but just so you have a both field of all of them. And if you hold on long enough, 4 or 5 years, longer even, you can borrow against them and they'll be sitting at much more higher prices. But yeah, 40% XRP and then the rest three-way into XLM, XDC, and HPRO. Miles, what do you think about Tether investing $775 million in Rumble? Tether has, yes, I heard the news. Tether invested into Rumble $775 million. I hope, look, what I would say for Tether is they're trying to hold on to something. Tether's lost their positions in the EU market space. They lost their positions also in Canada due to the regulations. They're going to lose their position in terms of a stable coin in other jurisdictions in the Western markets compared to the Asian markets. But then the Asian markets might also get pressured to delist them as well. So they're trying everything they can to hold on tight into the Western market space. And they've also tried to launch a fund for 2025 for an AI fund. A Tether AI fund is coming as well. But they're just trying to hang on, to be fairly honest, when it comes to Tether. Miles, I've ordered a Tangent, still waiting for it. It arrives, had an email saying it's been shipped to Royal Mail from Slovenia. Is that correct country where Tangent comes from? Yes, that's a correct country. If you order a Tangent, it either comes from Slovenia or it comes from Switzerland, or it comes even from some other essentially European countries. So it's perfectly fine, yes. My one came from, most of them come from Slovenia, to be fairly honest. One on Earth, Adi, come on, man. Yeah. Miles, a lot of my friends entered late to XRP. I'm getting tired of all the complaints I'm getting. Well, they had a chance to enter essentially a long time ago, to be fairly honest. I can't even trust my sister, as Zach said. For 2 years, they've never brought at 50 cents, and now they are crying. Yeah, facts. You could do anything pretty much in the market space. 100% truth, Miles, is diamond. We are so lucky, facts. Let's go, Ian. I'm an OG. Miles never charges for anything. He has accepted my calls often. That's true as well. Adi, hope you get your money back. Yes, same. I hope Adi gets his money back. I genuinely hope, Adi, you get your money back. As for the money, I know what Miles was going to say. How I did it before, $1,000. Yeah. Price predictions for ICP. Consider it. Look, what I will say to ICP will probably do good also on the rules and regulations, but it's not an area of my focus, to be fairly honest. What I focus on mostly is financial projects. So number one category is the financial projects, without a doubt. So focus on the financial projects. And then 2, the data projects. The data projects actually had a sit down with Donald Trump, believe it or not. Filecoin had a sit down, and some other essentially data projects had a sit down with Donald Trump through the Blockchain Association essentially event that was happening. But 1, financial projects, and subcategory of financial projects is tokenization. 2 is going to be data projects. 3, Web3 projects, and 4, AI projects, and 5, D-pins and C-pins, and so on. But keep your focus on those projects is what I would say. But price prediction ICP, all I would have to say to that is essentially consider variable change. That means under regulations, it could be sitting at any price pretty much. Not obviously drastic changes in price, but any price between where it's sitting now. By their fingernails, they're hanging on, Miles. It's a joke. Yep. Now, Deutsche Bank. Deutsche Bank is teaming up with one particular crypto asset to build its own blockchain. Deutsche Bank is taking its blockchain strategy forward by developing a layer 2 network based on ZK Sync, technology called Dama 2, with the help of AXL, developer Interpool Labs. It's a project that's listed on Binance as well, AXL. They've just essentially, they're being tested right now by Deutsche Bank to build their own blockchain on them. The initiative, reported by Bloomberg, addressed compliance challenges and regulated finance by improving transaction efficiency and strengthening regulatory oversight over public blockchains. The project is part of Project Guardian, a essentially blockchain-focused initiative spearheaded by the Monetary Authority of Singapore, the MAS, Deutsche Bank, and Interpol Labs, the original developer of the Axela network, are collaborating on the initiative to provide secure cross-chain interoperability for financial institutions. DAMA 2 leverages Memento blockchain ZK chain and Axela's cross-chain interoperability solutions built on ZK essentially syncs technology stack. The network aims to simplify the complexities associated with multi-chain fund allocations and asset servicing for asset managers. Axela's technology plays a crucial role in enabling decentralized and secure cross-chain operations, which is key requirements for traditional financial institutions like Deutsche Bank to effectively adapt a blockchain technology. DAMA 2 is designed to bridge the gap between traditional financial systems and blockchain technology by integrating off-chain assets on the on-chain ecosystems. Right now, they're essentially just doing testings on AXL. Let's see if they actually go ahead with them. Because there's a few projects that have a license under the MAS, which is the Monetary Authority of Singapore, for any of these banks to be using. And there's a few projects in the financial category. There's a lot of testings going around. Now, moving on essentially from Deutsche Bank to another company that's came forward, and in this hectic situation of a market space, they've raised $1 million to buy Bitcoin, and they're following MicroStrategy's footsteps. But before we go through that, let's go inside the comment section first, before we go through the next news. As I said previously, this is a live, which means if you do have any questions, put them down inside the comment section. I'll be more than happy to answer any questions you may have. I read out everybody's questions one by one, always. Every night, Monday to Friday. Let's see where we're at. 100% Miles, take your 100% Miles. I take your advice. I feel for you, Adi. Just do your own trades. Many have contacted lawyers. He's being investigated. Don't give him your money. I hope he uses his own money to pay you back, Adi. Well, that's not good. So the person that Adi gave money to is being investigated by lawyers right now. Adi, I seriously hope you get your money back. But next time you're about to do any sort of stupid movements, come to me first and I'll tell you it's a stupid move and don't do it. And I don't charge a single penny, which is why it just bothers me why you didn't come to me first. You can call me, you can video call me, you can message me. I don't charge money. You can always ask for my personal opinion. And I would told you, it's stupid. Don't do it. But Miles, well, I genuinely hope, Adi, you get your money back. Miles, what are your top data projects? Filecoin is one of them. Render is good in that category as well. Graph is good as well in that category. But you know, these data projects, some of them do also Web3 and data. But AR is good as well in that category. There's a few other ones, is what I would say. Hello, Woodhouse, good to see you, brother. How you doing? How you been? When XRP $100, 2025 or now? Consider variable change. Under regulations, anything is possible for the financial projects. Who is he? I don't know who this person is. I'll be honest, that the person that Adi gave money to. Trust equals death. Is what Thomas said. Who's this person talking, taking everyone's money? I have no idea who this person is. I'll be honest. Never ever do that in modern times. Yeah, never borrow money to never ever borrow money to random people on the internet. Honestly, people don't borrow money to their own family members because they don't pay it back. To borrow money somebody over the internet is just stupid. In general, that is so tough to deal with, but that is how it is now. Sad but true. Yes, honestly. Miles, do you hold Render? I used to. Now, Quantum Biopharma adds $1 million in Bitcoin to its treasury. They're following MicroStrategy's footsteps. So in this hectic situation of Bitcoin sliding downwards, market going downwards moving slightly, companies are taking advantage of this movement right now. Quantum Biopharma Limited, for example, a NASDAQ-listed biotech and medical research company, has purchased $1 million in Bitcoin and other cryptocurrencies as a part of its portfolio movement and approved by its board of directors. The company plans to allow future financing and transactions in cryptocurrencies, signaling a confidence in the evolving crypto market space. Obviously, 2025 is going to be incredible. The company disclosed that the cryptocurrency assets are held with a compliant custodian to ensure adherence to financial and audit regulations. Its leadership believes that the investment aligns with growing legitimacy of digital assets and the potential for shareholders' returns. Zimshin Said, CEO of Quantum Biopharma, cited advancements in the Bitcoin's legal status and market acceptance as key factors behind his decision. He also pointed to the renowned optimisms for crypto policies under President-elect Donald Trump and the introduction of Bitcoin-based exchange-traded funds by global asset managers. He said, "We are exploring innovative ways to grow our capital not being used in operations," Said said in a statement. The company emphasizes commitment to monitoring market conditions and adjusting its cryptocurrency holdings as needed. This marks Quantum Biopharma's entry into a growing trend where traditional companies diversify assets with Bitcoin and other digital currencies to capitalize on emerging financial trends. This move comes aimed at a broader institutional shift towards crypto adoption as businesses and asset managers increasingly integrate digital assets into their financial strategies. Travala, for example, a crypto-based traveling booking platform, also recently introduced a treasury reserve plan after exceeding $100 million, which I revealed a few days ago as well. And this plan includes a reserve of Bitcoin and other crypto assets. Genesis Group, also another company, expanded its Bitcoin treasury by acquiring 194 Bitcoin for $18 million at an average price of $92,728 per Bitcoin. The move aligns with its Bitcoin-first strategy, which aims to allocate 90% of its reserves to Bitcoin with a target of $120 million. To add on top of that, with all the hectic situation going on inside the market space, by the looks of it, for example, Metaplanet, another Japanese company essentially that's following MicroStrategy's footsteps and isn't slowing down on the crypto market space. They couldn't care less about what the situation is now because everybody knows what the situation is going to be under Trump in the first 100 days. It's going to be absolutely incredible. Metaplanet, for example, today announced they just secured $30.91 million bond deal with Evo Fund to buy more Bitcoin. Metaplanet Inc. has revealed the offer of its fifth series of ordinary bonds as the fifth tranche of the issuance through private placements to Evo funds and secured 5 billion yen, which is equivalent of $31.9 million. The fund from this issuance will be invested into the purchase of Bitcoin, as the company indicates in its previous announcements. However, this comes after Metaplanet revealed November 28th, 2024, that it was venturing into the issuance of bonds amounting to 5 billion yen back then, but now it got approved. The bonds are sold at 250 million yen, essentially $59 million each, and are due on December 20th, 2024. The bonds attract no interest and redeemed at the face of value of the bond issuance with a full coupon. The companies issued these bonds for a term will be mature on June, essentially 16th, 2025. However, the bonds can be redeemed by the request of Evo Fund. The fifth series ordinary bonds are exclusively available to Evo Fund and are not guaranteed. According to the Article 702 of the Companies Act and Article 169 of the Regulations for Enforcement of the Companies Act, no bond trustees appointed. Metaplanet has clarified that the principal and interest payments will be made from its Tokyo office. The company has stated that the issuance would not affect its consolidated financial results for the fiscal year ending December 31st, 2024. However, Metaplanet has committed to providing timely updates should the transactions have any material impact on its financial outlook. This bond issuance is a part of Metaplanet's strategy to invest in Bitcoins using essentially borrowed funds. Instead of utilizing its cash reserves, the company is raising funds through bond sales to investors like Evo Fund. While this approach enables Metaplanet to acquire Bitcoin without affecting its liquidity, it also introduces financial essential obligations, as the funds must be paid regardless of Bitcoin's market performance. The structure of the bonds allows for flexibility, including early redemptions if the proceeds from the excess of 12 series stocks acquisition rights surpass the bond's principal value. This aligns with Metaplanet's broader strategy to balance investment opportunities and financial obligations. This is proven by Metaplanet, which is sought to issue bonds to purchase Bitcoin to show its commitment to the cryptocurrency investment. Thus, the firm's strategy to essentially attempt to use the funds sourced from the external environments to fund the acquisitions of fixed assets, all the same keeping their cash. Such investors and stakeholders are keen to note how well the strategy is essentially setting out concerning market standings. It just shows how much of a, they couldn't care less. They just want some money to buy Bitcoin no matter what. Because the money that essentially Metaplanet has raised through bonds, the company that they did it with can ask for that money back anytime, but they couldn't care less from wherever they got the money from. They just want to buy more Bitcoin. This is a massive corporation inside of Japan. So all this hectic situation that's going on, institutions are still buying. They're still raising money to buy more, enter the market space, and position themselves for 2025, no matter what. So just keep that in mind. And to add on top of that, no need to panic. A message, a strong message and a bold message coming from Grayscale. No need to panic. Bitcoin's recent retreat from its all-time high of $100,000 has raised concerns among investors, especially after the Federal Reserve triggered a sell-off. However, Zach Pandel, the director of research at Grayscale, tried to calm down the market, stating that short-term volatilities should not overshadow the long-term prospects. In an interview, Pandel essentially noted the supportive macroeconomic fundamentals, the institutional adoption that's going to be happening, and the developments of regulations as key catalysts for further growth on the market space. Bitcoin's price, for example, has been influenced by most recent rate cuts by the Federal Reserve, and saying essentially that they're not going to be doing any sort of rate cuts moving in forward. And they're still cutting rates, but they signaled maybe fewer rate cuts next year, which is what the sell-off caused, apparently. This made the dollar stronger and put temporary pressure on these assets that are similar to the dollar, like Bitcoin and gold. However, according to Grayscale's Pandel, more central banks are cutting rates, which is a positive environment for cryptocurrencies. As I've always have said, cutting interest rates is a positive for the crypto space. Except this one came with a side of manipulation. Jerome Powell, we're cutting interest rates 0.25%. Good. And then a random journalist, who let's just say is a plant, goes, are you ever going to be holding Bitcoin? And Jerome Powell goes, no. And the rules will never change. Market goes, US dollar goes. According to Pandel, the volatility experienced recently is a proof that Bitcoin is here to stay and is only going to significance in the world of finance, he said. Bitcoin is not an isolated asset in the financial market space. As it essentially reached a market capitalization of $2 trillion, Bitcoin has become as liquid as the euro and yen, thus becoming an indispensable part of the global financial system. Pandel expects the microeconomics landscapes coupled with the adoption factors to underpin the strength of crypto assets. He pointed it essentially to the ETFs and the positive political stance towards cryptocurrencies in the United States as a factors that can enhance Bitcoin's adoption and price in the next few years, or crypto assets in general. According to Pandel, the current price trend of Bitcoin is typical of an essentially intermediate stage at the market cycles. He noted that Bitcoin's share in the total crypto market capitalization is already falling, which is typical for previous cycles. We're probably at the phase where Bitcoin's dominance should be coming down, he said, adding that this may lead to an altcoin season. This is a perspective from Grayscale, the director at Grayscale. In the case of altcoin outperformance, according to Pandel, the same potential gives investors a possibility to diversify their investments amidst cryptocurrencies. Altcoin season is always good for the majority of our investors, he continued. This mentality is indicated as a changing perspective from the sole focus on Bitcoin and other potential blockchains. As institutional investors venture into cryptocurrency spaces, however, Pandel opinion that although there might be a short-term volatility in Bitcoin's share, this digital currency is here to stay as one of the industry's pillars. He said that it is a role to play for the long-only strategies, especially in the traditional market pools of capitals, such as pensions, endowments, and sovereign wealth funds, which he said is natural for Bitcoin. The Grayscale executive stressed out that the major policy shifts expected to occur in the next 4 years of the new US administration, which he referred to as a big turn in the policy, These changes that are coming in the US could offer much needed clarity for the crypto markets with regards to staking as well as institutional adoption. I don't see anything wrong with staking, he said. We just need clear rules around that, Pandel. Pandel emphasized, noting that providing more guidance in the market matters and would open up a new ways for institutional investors to invest. Institutional adoption is still the main story of Bitcoin's developments, with large investors such as pensions and sovereign wealth funds predicted to enter the markets. According to Grayscale's executive, this is because Bitcoin is now a $2 trillion asset class, which has the potential to lure these institutions. He said the futures regulation would enhance the integration of Bitcoin and cryptocurrencies with traditional financial systems, as more people take digital currencies seriously. 2025 is going to be incredible, no doubt about it. New SEC chairman, rules and regulations, new CFTC chairman, Trump being president, America, the biggest market on the planet, being pro-crypto, banks, institutions entering due to the regulations. The world follows America's footsteps and the market goes absolutely ballistic. But from now until January 20th, anything can happen. After January 20th, the first 100 days are going to be very crucial for the market space. So that is a perspective from Grayscale's director. Not a random analyst or a random expert or a random influencer inside the crypto space. No. Grayscale's director, a billion-dollar company's director, coming out and saying, no need to panic because we're going towards a positive market space in 2025. And that altcoins are going to have that season in 2025. Now, the EU, MiCA crypto regulations, they're coming in full effect, pretty much, end of this month. So EU's MiCA crypto regulations could impact market liquidity. Now, this news is coming from Bloomberg. So here it is. The new EU crypto regulations set to take effect at the end of the year are already reshaping the markets for digital tokens, especially stablecoins like Tether's USDT. Many crypto exchanges in the EU have delisted the dominant stablecoin USDT to comply with MiCA regulations. It's true. Coinbase delisted USDT. Binance partnered with USDC Circle to delist USDT. It's happening. And while the regulations aim to improve oversight and prevent crimes like money laundering, crypto experts warn that they might reduce market activity without fully achieving these goals. Crypto executives warn that the MiCA regulations may reduce market liquidity without meeting their intended goals and potentially making the EU less attractive to digital asset traders at a crucial time. Now, there's a reason I'm sharing this article, and I'll tell you towards the end of it. Usman Ahmed, the CEO of Zodia Markets, explained that the removal of USDT, the most liquid stablecoin, limits options for EU clients. While stablecoins like USDT are essential for crypto traders to transfer funds, move money across borders, and settle traditional assets, and concerns have grown about their use in illegal activities, as witnessed in recent reports of Russian networks using USDT for illicit activities. However, Tether has commended these illegal uses and emphasizes commitment to preventing such activities. In an effort to tighten the oversight of the asset class, the MiCA requires all stablecoins listed on centralized exchanges and must be issued by a company with an e-money license. The issuers must keep up to 2/3 of reserves backing their tokens with an independent bank and monitor all transactions made for the payment purpose. While Circle has received this license, but Tether hasn't yet obtained it, which could lead to a delisting by December 30th for USDT. Even with the MiCA in place, authorities need better tools to track illegal transactions, something that is not ready yet. USDT has been widely used in illegal activities, but Tether is working to address this with a new partnership aimed at combating financial crimes. Meanwhile, with President-elect Donald Trump's victory, there are rising expectations that the US will adapt a more crypto-friendly regulatory approach, sparking a market rally. In contrast, Europe is witnessing a decline in crypto investments, and venture capital in crypto startups is set to hit essentially a 4-year low, raising concerns that it may fall behind the crypto markets. However, there are some encouraging signs of crypto ownership in the Euro area, as more than doubled to 9% since 2022. Though the European Central Bank cautioned that the increase may be influenced by a change in essentially survey methodology. Despite this growth, the removal of USDT from platforms in the EU is expected to significantly reduce liquidity. As USDT has the most trading pairs globally, traders are likely to face disruptions as they move away from USDT to other stablecoins or fiat pairs. Some exchanges, like OKX, have already seen traders shift to their pairs instead of using other stablecoins. Let me make one thing very, very simply clear. This article is a sabotage article, and we see quite a lot of these articles inside the crypto space. For example, Justin Sun, the founder of Tether, are two of the most controversial people inside the crypto space. Justin Sun has had cases opened on him. Tether's founder has had cases opened on him as well. They are very incredibly controversial people because the money that flows into their projects, we don't know where it comes from. And I'm not saying we have to know where the money comes from, but this is where the issue lies. Because what this article and other articles alike forget to mention is, why is the EU banning USDT? The EU is not banning USDT because they want to see their markets have less liquidity. They're not banning USDT because they're being spiteful towards Tether. No, they're banning USDT because USDT will not show transparency. How difficult is it for a stablecoin to show transparency? It shouldn't be that difficult. The EU has one simple rule. You want to be a stablecoin in the EU, hold some of your assets. It could be treasury bonds, it could be fiat, it could be actual US dollars, whatever's backing USDT, hold some of that in EU banks. And then the Tether essentially goes, well, no, we don't trust the banks. Well, how is the EU supposed to trust you? Just assume you have backings. Let's say one day, for example, Tether depegs, and they're not holding any of their assets in EU banks. What happens to the EU economy then? It goes. So what the EU is actually doing, they're not doing it because they're against Tether. They're not doing it because they're trying to be spiteful to USDT. They're not doing it of any of those reasons. And there are so many articles spinning inside the crypto space, making Tether look like the angel inside the crypto space, making USDT look like they're saving crypto, they're standing behind stablecoin. No, USDT is a crook, and so is the Tether is a crook, and they won't show transparency, which is the main concern for a stablecoin. Because USDC had no problems. Circle said, sure, you want transparency? We'll hold some of our assets in your banks and prove to you that we will never depeg. Even if we do, we're holding some of our assets in your banks. So if a depegging situation happens and businesses in the EU are using our stablecoin, can survive. But in Tether's case, they want nobody to hold their assets. They want to hold their own assets and pretend they have assets to back their stablecoin. And if things ever depeg and go south, all EU businesses will just go. And what happens to Tether? Nothing. They're probably going to track down Tether's CEO in a cave somewhere to put him in prison. So, and just to make one thing clear as well, CoinDesk, for example, today, it's a news that I didn't put in my notes to share, but I'll share it to you like this. CoinDesk today fired 3 of their publishers. Now, you might be asking yourself, okay, a company fired 3 people. Not big news, not big deal. Well, the 3 people CoinDesk fired as publishers and editors today, who are higher up editors in CoinDesk, were people who were removing bad things that was said on CoinDesk about Justin Sun, which puts CoinDesk integrity as a news company or journalism in the toilet. So CoinDesk fired 3 people because they were removing articles that said anything bad about Justin Sun. Justin Sun and Tether's CEO are incredibly dodgy. One of them is paying off publishers in CoinDesk to remove anything bad about them. The other one, Tether's CEO, won't show transparency to the EU for a stablecoin they claim has all the backings. These 2 are crooks, and time will tell. Now, moving on, and look, other stablecoins will take their position. The EU isn't the only one that's delisted USDT. Canada's delisted USDT as well. The best part is, when Coinbase delisted USDT, when Binance partnered with USDC and is getting ready to delist USDT, Tether's CEO said, hold on a minute, why is everybody delisting us? You should be standing behind Tether, not the EU. This is why I say Tether's CEO is definitely living in some la-la land, delusional land. Do you expect Binance Exchange, who lost their CEO and paid $4 billion in fines, to stand behind Tether and not back the EU? Tether's CEO is definitely living in la-la land, thinking that if Binance is ever going to pay another fine, or if Coinbase wants to pay a fine to back Tether, good they dropped Tether. You should drop any sort of fraudulent stablecoins. So any articles coming out and backing Tether's CEO and saying, oh, everybody should stand behind Tether's CEO, he's standing for stablecoins. He's not standing for stablecoins. Tether's CEO is not standing for stablecoins. In fact, some people might not know this. Tether's CEO, Tether had to pay $14 million once because they claimed to have backings when they did it for their stablecoin. Tether paid a fine once. A very long time ago. A lot of people don't know this inside the crypto space. Also, a lot of people don't know this about Tether. Tether, once their CEO came out and said, the US is not working with countries like, essentially, the US is not working with countries like Venezuela or Russia. And Tether's CEO said, well, if the US won't let Venezuela use the US dollars, Venezuela, who is sanctioned, by the way, can use USDT. He went basically saying any country that is sanctioned by the US dollar can use USDT. Some of you might be cheering for that, but as a business perspective, Matt, just listening and looking at that from a business perspective, it's a stupid idea. Because then your company will be looked into and sanctioned. And then your stablecoin that's running most of the crypto space will get affected, which will affect the crypto space and cause a domino effect. So a lot of issues wrong with Tether. But any articles coming out and saying positive things about Tether, BS. Tether's CEO is dodgy, and Justin Sun is dodgy. Paying off publishers in high-profile places like CoinDesk, and these weren't random editors. They were top-player editors in CoinDesk. All 3 of them fired because they were removing articles. Anything bad about Justin Sun. And good CoinDesk did that because CoinDesk saved their integrity as a journalism company. Because they don't stand by this whole, favoring thing. Because that's what The View does. That's what CBS does or CBN does and so on. That's what these news channels do. So good that that essentially CoinDesk fired those people. That's what you should do. Any journalist that's spreading misinformation should be fired. Genuinely should be fired from any news channel, from any news company. Any journalist spreading misinformation or hiding information should be fired. So I approve so much on what CoinDesk did, firing those 3 morons. Standing behind CoinDesk on that one, honestly. I like CoinDesk even more now for doing that move. Honestly. It's in my top 3 or top 1 of the news company for crypto, just for that move that they did. Firing publishers, high-profile publishers, because they wanted to stop the misinformation and stop essentially hiding information. Normally, companies will do that silently, but they did it loudly. So it sends a warning message to any other journalist in that company doing that. Now, moving off Tether's essentially illicit activity behavior to the US economy. The US economy is expected to enter a recession, maybe next year or maybe not. So here it is. The US economy is heading straight for a war, apparently. All signs point to a recession in 2025. It's not even subtle. Economists, analysts, and market watchers are connecting the dots, and the picture isn't pretty. I'll tell you my perspective straight after. The Walmart recession signal is screaming danger. The signal tracks Walmart stock prices against the S&P Global Luxury Index, and guess what? It's at its highest points since the world shut down in 2020. Walmart shares essentially jumped a whopping 83% this year, while luxury goods stocks flatlined. History shows us that when this happens, this is the gap that widens this much more, and a recession every single time. Americans are out of money. Well, there's a good reason why Americans are out of money, because Biden's freak show of essentially administration were running America for 4 years. Of course, there's no more money left in America. It's all in Zelensky's pocket in Ukraine. And those essentially checks that once kept people spending like the party would never end. Consumer spending, which is the backbone of the US economy, is starting to sag under the weight of exhausted wallets. Retailers are feeling it right now. Restaurants are feeling it. The entire economy is bracing for an impact. Continuing unemployment claims are up 15% compared to the pre-pandemic levels. While unemployment rates aren't skyrocketing yet, the cracks are showing. You know what the best part is? When essentially the voting thing was going on, the presidential race in America was going on, when it was Biden versus Donald Trump, this recent one we had, and then it became Kamala versus Trump, they were coming out with numbers and saying, under the Biden administration, everything was excellent, is what they were saying. When the presidential race was happening, they were saying, under the Biden administration, these 4 past years, everything's been excellent. The economy is booming. Everybody can afford everything. People can afford rent, mortgage. Everybody can afford a home. Everybody can afford a car, is what they were saying during the presidential race. Now that the presidential race is over and Trump has won, they're saying, yeah, the economy is not doing too well. No, people can't afford groceries. Unemployment is up. Crime is up. Where were all these numbers and statistics before? The FBI was releasing reports saying crime is down under Biden. How? Now, crime is up because the race is over. Who cares anymore? The rising claims mean more people are losing their jobs. Information they missed out from the presidential race. And fewer are finding new ones quickly. If this trend keeps up, it will only feed into a recession spiral. Wages, sure, they've risen, but not enough to keep up with the inflation. People might be earning more on paper, but in reality, they're buying less. That's how essentially a recession starts. And about inflation, it's still here. It's better than the nightmare of 9.1% peak back in June 2022. But October's 2.6 rates shows we're far away from the outwards. Experts can't agree on just how bad it will get, but no one's denying the risk anymore. It's the best part. No one's denying the risk anymore of a recession. During the presidential race, what recession? Biden did a great job. Biden's administration did a great job. America's booming. Now that the race is over and Trump's won the presidential race, they're saying no one's denying that America's doing poorly now, and that a recession could be a possibility. The BCA research is particularly betting on a recession for both the US and Canada next year. Their argument, the labor market is too shaky and consumer spending is falling off a cliff. It won't be another 2008 style disaster, but it will hurt. So not as drastic as 2008, but it will be some ups and downs. Goldman Sachs, ever the optimist, says not so fast. Goldman Sachs has a different perspective. They're betting on Trump's administration coming in and fixing things before we go into a recession. And it's exactly what I said as well, pretty much. Recession bubble for every country. Recession bubble for every country. We're going to side curve it. Genuinely. A recession bubble for every country, and we're just going to skim past it. There's a possibility if the numbers come out the other way, we go straight into a recession. But I said every country is pretty much side paneling essentially a recession. Just skimming it by millimeters. Goldman Sachs, the ever optimist, says not so fast. They're banking on a 2.5 GDP growth for 2025. Goldman Sachs is saying we can do this. 2025 is going to be an amazing year. And I believe in Goldman Sachs. The only reason I believe in Goldman Sachs is because Trump is the president of the United States. A businessman is in control of a country which is technically like a business. And they're banking on a growth happening in America, not a recession. And they're putting the odds of a recession even happening at 15% only. They're clinging to the hope that policy changes under the new administration would shake things up too much, which will stop a recession happening. But then there's JP Morgan throwing water on Goldman Sachs' sunny outlook. They're pegging the recession risk at 45%, citing a shrinking money supply and potential global shocks as key threats. Let's talk numbers. GDP growth predictions for 2025 are all over the place. Goldman Sachs says 2.5% is on the high end, while some essentially estimate as low as 1.9% growth. The unemployment rate that's expected to hover around 4.2%, but inflation stays controlled. It could drop closer to 3.5%. And the Federal Reserve, they're unlikely to essentially cut interest rates more than twice next year. So inflation will likely fire up as early as January. As if the domestic economy wasn't fragile enough, global risks are piling on. The Russian and Ukraine war continues to mess the energy prices and supply chains. Meanwhile, China's economy is slowing down, and that's bad news for everyone. Yes, the only reason the Russian and Ukraine war is continuing on is because the US keeps on sending billions of dollars to Zelensky for no apparent reason. Well, obviously the reasoning is because the people that supported Biden to become president are moving Biden like a puppet, which typically ends up being gas and oil companies. But those same groups will never be able to control Trump as a puppet. It's the reason why they didn't like Trump, because nobody can control Trump. And that's what's good about Trump, that nobody can control Trump. That's what a president should be. Thinking on his ones, thinking by himself, and making decisions by what's laid out on the table. Unlike Biden, who just goes, yes, sir. Or the freak show of Biden's administration, of genuine circus freaks. As if the domestic economy wasn't fragile enough on that matters, if the Chinese demands for US exports drops, it will hit American manufacturers and farmers hard. And let's not forget the the real estate sector as well, which is already feeling the heat from higher interest rates. The rising of vaccines and falling investments in this space could spill over into broader financial markets. Then there's Donald Trump. His return to the White House in January 2025 will come with a new set of policies, and some of them could tip the scales. His plans for tariffs are already raising eyebrows. A proposed 25% tariff on imports from Canada and Mexico and a 10% tariff on Chinese goods could drive prices up across the board. Goldman Sachs estimates these tariffs could alone boost inflation by nearly 1% point. That's the last thing the economy needs. And trade relations, these could get ugly fast. Tariffs tend to spark essentially retaliation and full-blown trade wars that could wreck supply chains and kill growth. Businesses that rely on cross-border trade would take a direct hit, leading essentially to layoffs and higher prices for consumers. Complete load of BS. Trump's tax policies might provide a short-term boost, but could also backfire. No, it's not going to backfire, because the last time Trump was in power, it didn't backfire, and it's not going to start backfiring now either. If the economy doesn't grow fast enough, which it will, to offset the lost revenue, we're looking at a higher borrowing cost and a potential loss of investor confidence. Look, they're trying to make it look like Trump coming into power, everything's going to go sideways and everybody run and scream. But according to the companies, according to the American institutions, that's not the case. As much as Biden's freak show of journalists, the circus freaks, want to write articles and spew lies about Trump and his tariff plans and how Trump's tariff plans are going to ruin American lives. No, they're not. They're actually going to save American lives. But some people are too stupid to realize that Trump is actually going to save your lives in America. Just by ending the Russian and Ukraine war, your energy prices, not just for America, but for the rest of the world, will go back to normal. Not overnight, but over time. Just by ending the Ukraine and Russian war, over time, your energy prices in EU countries, in the UK, everywhere else around the world will go slowly back to normal. Those high prices you're paying for gas and electrics will just go down. But obviously they're not going to mention these things because why? Because Trump doing a good thing shouldn't be on the news. Trump doing a bad thing that never existed should be all over the news. Look, as much as they want to, say Trump is going to bash lives and, ruin everything, he's not. He's actually here to fix everything. Because I'm telling you right now, if Kamala Harris won, 2008 crisis would look nothing compared to what Kamala Harris would have caused in America. 2008 would look like a joke compared to what would have happened in America if Kamala Harris won. That goldfish OnlyFans peanut brain could have never made America great. Genuinely. So we're very lucky Trump won. As much as the freak shows from Biden's administration want to write articles and spread lies, the American institutions are actually positioning themselves. American institutions are positioning themselves right now for a positive market space moving forward. But we are going skimming past a recession right now. And this was caused by Trump's administration, by creating a random war with Ukraine and Russia, by creating other random wars, by funding Zelensky billions of dollars when Americans can't pay their rent. But some people are still too stupid to realize that. Cathy Woods, sticking on a positive momentum. Cathy Woods predicts M&A surge following Trump's election. You see? Trump's freak show journalists think Trump's going to ruin everything. But then the institutions, as I said, are seeing Trump as the savior for businesses. Cathy Woods predicts an M&A surge following Trump's election and an FTC regulatory changes happening. Cathy Woods, the founder of ARK Invest Management, forecast a wave of mergers and acquisitions happening under Trump. She emphasized how changes in the Federal Trade Commission, FTC policies, could dismantle barriers that previously limited private companies' buyouts. Cathy Woods anticipates this regulatory shift will create a favorable business environment for essentially tech startups. Cathy Woods highlighted the importance for the M&As and landscape space. She believes removing these constraints will spark liquidity events in America. This will enable startups to engage in open and fair market pricings. This development essentially could also provide significant acquisitions and opportunities for venture-backed firms supporting broader innovation and market growth. Cathy Woods remains fully bullish on the crypto market space and stands firm at her forecast that Bitcoin will also hit $1 million by 2030. She attributed this outlook to the scarcity. She further believes that the supply for Bitcoin is limited, which makes it increasingly more desired than gold. According to Cathy Woods, Bitcoin offers a unique advantage over gold. While rising gold prices encourage increased production, Bitcoin's supply remains fixed regardless of demand. Institutional interest, including Bitcoin's ETFs, continues to support the cryptocurrency long-term growth. Cathy Woods compared Bitcoin's $2 trillion market size with gold's $15 trillion market space. This suggests room for exceptional growth. The ARK CEO optimism is shared by institutional players. The Trump administration's pro-crypto stance adds further optimism for the industry. This includes the nomination of Paul Atkins to replace SEC Gary Gensler. Cathy Woods expressed confidence in this policy shift. She noted this alignment with broader innovation and market expansion goals. Cathy Woods believes regulatory adjustments will empower the crypto sector, positioning it as a vital part of the global economy. And further, Federal Reserve Chairman Jerome Powell's recent statements, where they essentially described Bitcoin as a digital form of gold, as a positive continuation. Thus, the shift in regulations and markets of the new administration is expected to drive not only M&As, but also a general cryptocurrency market. This dual momentum could redefine business landscapes and digital asset adoptions in the years ahead. So, journalists think Trump is going to ruin the world. Institutions are waiting for Trump to fix the world. Isn't that interesting? Journalists with no business background, no economic background, no political background, no any sort of background that's useful in the real world, think Trump is going to ruin the world. Institutions are all lining up and saying, this man is going to fix the world. In 2025, with his policies, with his tariffs, with a new SEC chairman, with a new CFTC chairman, with regulations within the first 100 days. And all the institutions are here for it. US courts is what we're going to talk about next. But before we do that, let's go inside the comment section first. As I said previously, this is a live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer the questions you may have. So let's see what's going on inside the comment section first, and then we go straight into the next news. Let's see where we were at. We were at here, I think. What is going on? It's going great. What else could see? So, what are you doing? When Gary Gensler getting fired? January 20th, he's leaving by himself. High price in dollar peso. Yeah. Do you think we can make $20 in the first 100 days of Trump's in office? It's possible. Regulations need to be there for it to happen. It's possible, yes. Happy Pisces, good to see you. How you doing? How you been? RLUSD will save us miles. Oh, yes. RLUSD will definitely save us all. Tether is an evil coin, yes. Because they're backed by Pete's. Because they're backed by Pete's. Good morning, my brother. Good to see you as well, Samuel. How you doing? How are you? More grace, brother. Let's go, Samuel. Brother, please, can XRP get to $500 when Trump over 1 month time? No, not in 1 month time, but give it time, consider variable change. Yes, it's possible. Very possible. Highly possible. Share the live. Let's go, Scott. Miles is on the roll. Let's go, CMF. Let's go, Scott. Let's go, Miles. Let's go, Scott. CMF, why, bro? Any tips when selling out of crypto held on Crow app? Yeah, my first tip for you is definitely, bro, don't hold any of your cryptos on Crow app. Hold your crypto assets on your cold storage wallets, and if you want to sell them, then shift them over to an exchange to sell them. So tip number one, don't hold any of your crypto assets on Crow app. Get a Tangent. By the way, I'm sponsored by Tangent as well. Not being biased, but I can actually get you a discount on Tangent. Just use the word crypto miles, and you get 10 to 20% off on your Tangent. But get a Tangent. And if you want to sell to stable coins, you can sell to USDC if you want, or RLUSD, and so on. Now, Biden is very old. Yeah, he is. No recession. Yeah, I agree. But we are very close to it, but yeah, I agree. Bitcoin's chance will disappear one day? No, it won't disappear. What is the best way when selling crypto held on Crow app? Looking at paying out the lowest fees. Crypto.com doesn't have low fees. That's the issue. Preferably Binance is where you want to sell. Binance has extremely cheaper fees. Excuse me, what are you trying to say? I can't pay my rent. I can't pay my rent. Thank God I own lots. Yeah. honestly, JP. Now, US courts. So, as you all know, Ripple versus SEC, the biggest case inside the crypto space. There's also the other Ripple versus random people. So, here it is. US courts set key deadlines for Ripple case. Not the Ripple case you're thinking, but I wanted to share this so you don't get confused when this news drops by tomorrow or so on, and you think this is the Ripple case versus SEC. It's not. So the United States Court of Appeals has outlined significant dates for the new lawsuit initiated by Bradley Sostak against Ripple. This announcement includes crucial deadlines for filings and the timelines for key arguments in the essentially appeals process. The court has acknowledged the appeal concerning Ripple's lawsuit and has assigned it a case number. It has instructed essentially that all motions related to this case must be filed separately. Bradley Sostak is required to submit his mediation of questionnaires by December 23rd. In addition, the appeals transcript order must be submitted by December 31st. With the appeals transcript due by January 30th, the essentially opening brief for the appeal is set for submission on March 6, 2025, against Ripple and the CEO, Brad, who must respond by April 7th of essentially the same year. The court indicated that if the hearings are reported, parties involved should coordinate on transcripts and assignments as needed. Ripple has previously gained from a favorable court rulings, but Sostak's appeal challenges that outcome. Judge Phillips Hamilton has approved modifications to the decision and hearing requests in the XRP case. This lawsuit against Ripple continues alongside the ongoing case with the SEC in the Second Court of Appeals. The resignation of the SEC chairman Gary Gensler on January 20th has sparked optimism from the crypto community regarding the potential resolutions. Ongoing vigilance regarding the court's deadlines will be vital for all stakeholders involved, and key takeaways include Bradley Sostak's mediation questionnaire due by December 23rd. The opening brief for the appeal will be essentially submitted by March 6, 2025, and Ripple must respond by April 7, 2025. As this case evolves, participants are gearing up for the continuing legal journey, ensuring they are well prepared for the complexities that lie ahead. I just want to make one thing very extremely clear. The only reason I'm sharing this article is because I wanted to tell this to everyone that this case is complete a load of horse crap. This case has no use case whatsoever. The only case that matters when it comes to Ripple is Ripple versus SEC. Any other case by any other moron who's decided to sue Ripple by themselves doesn't matter. So the only reason I'm sharing this case is because I wanted to share it before anybody else on X shared it and started using it for clickbait and saying, oh, you know, another company is suing Ripple, or someone is suing Ripple, or the SEC is going to take Ripple down, or whatever, for clickbait information. This case is a lot of horse crap, pretty much. It's just another moron who's decided to sue Ripple because apparently Brad made a promise to everyone buying XRP. XRP is going to go skyrocketing up. I'm not saying XRP isn't going to skyrocket up, because it is, in my point of view, without a doubt. XRP is an incredible asset. It's going to do extremely well. No doubt about it. With XRP, no doubt about it. Incredible asset. I've always said this since day one. But this case is a lot of horse crap. It's just another person that's coming out and saying, Brad, hypothetically, somehow, I'm guessing this man had a dream, and Brad said in his dream that he's going to make him rich if he buys XRP, and now he's decided to sue Brad and Ripple because XRP didn't make him rich. And he's not the only moron that's doing this lawsuit. There's a few other morons in California who lined up to actually sue Ripple because apparently Brad promised them. I'm guessing, again, they probably had a dream that Brad was in their dream telling them they should buy XRP and it's going to go skyrocketing up. But cases like this, don't pay attention to it. Just brush it off. Just outside noise. But the only reason I shared it is because I didn't want anybody to get confused on that matter. And essentially, read something on X and say, is Ripple getting sued? Is what's happening? What's this? What's that? So I just wanted to share this to you and just tell you very simply, it's complete horse crap. Don't listen to it. He's not the only moron that's suing Ripple because apparently Brad promised him something that didn't exist. Now, crypto, the corporate influence is creeping in the essentially community and reacts to BlackRock. BlackRock did an advert that the Bitcoin Maximus people didn't like. And it was a funny one. So obviously BlackRock is the king of manipulation. Nobody tops BlackRock when it comes to manipulation. Obviously, Jerome Powell is good at manipulation as well. He's excellent at manipulation, Jerome Powell is. Biden's freak show of circus freaks are very good as well at manipulation. But, their funding has to come from somewhere to manipulate, and BlackRock is normally the one funding everything. So BlackRock decides to do an advert. And in the advert, they said that, well, here it is. So BlackRock, the world's largest asset manager, released a 3-minute video promoting Bitcoin. The video highlighted essentially Bitcoin's fixed supply of 21 million coins. However, it also included a disclaimer on the advert that has cast doubt on Bitcoin's fixed supply of 21 million tokens, stating, so this is what the BlackRock Bitcoin advert, at the bottom of the advert, there was a disclaimer. And in that disclaimer, it said, there is no guarantee Bitcoin's 21 million supply cap will not be changed. This has many in the community concerned about the growing influence of corporate giants like BlackRock. So the Bitcoin, the type of people that say Bitcoin is everything and nothing else matters are angry. They're saying, why does even BlackRock have some sort of an influence on Bitcoin's price? I don't know, because they have the biggest ETF in the world on Bitcoin. Because the reason why Bitcoin is sitting at $100,000 in the first place was because of BlackRock. So obviously now the Bitcoin maxis are ungrateful that BlackRock has made such an advert stating that Bitcoin's supply can increase. It doesn't have to stay at 21 million. This has many in the Bitcoin community concerned. Bitcoin's 21 million supply cap is a core principle of the cryptocurrency because Bitcoin has nothing to offer. I've always said this, the only reason Bitcoin even seemed like a great investment for institutions as an ETF was its limited supply. I'm telling you right now, if Bitcoin had a high supply with how slow and expensive it is and very difficult to build on, it would have never had the success it has as an ETF. And Bitcoin, the only thing Bitcoin brings to the table, Bitcoin does not bring speed, it does not bring costs, bringing the cost down. It doesn't bring easy to build. It brings nothing to the table except a limited supply. And if you take away Bitcoin's limited supply, that's it for Bitcoin. So Bitcoin's 21 million supply cap is a core principle of the cryptocurrency. This fixed supply ensures that Bitcoin is as scarce as mimicking precious metals like gold, and is what gives Bitcoin value. By limiting, essentially, the total number of coins that can ever exist, Bitcoin avoids inflationary pressures. It is a key part of Bitcoin's appeal as hard money, something that is resistance to the government's manipulation. BlackRock's ad briefly acknowledges Bitcoin's supply limit, but also introduces doubts. Because BlackRock's advert says, Bitcoin, 21 million supply. And at the bottom it says, disclaimer, the supply can increase basically. This comment has caused an uproar among Bitcoin's most passionate supporters. The ones that, breathe Bitcoin, sleep Bitcoin, eat Bitcoin, those types of people. They argue that altering the supply would undermine Bitcoin's fundamental value. This Bitcoin advocates see the fixed supply as essential to the decentralized nature of the cryptocurrency. The idea of changing the supply limit is seen as an attack on Bitcoin's core principles. The co-founder of Solana, expressed his concerns on X, calling out BlackRock and Bitcoin investors like Michael Saylor to speak up. He argued that traditional finance views of Bitcoin as a tool for investment, not a decentralized system. He challenged both BlackRock and Michael Saylor to commit to running their own full nodes, ensuring they follow only the Bitcoin network that supports the 21 million cap. I'm sorry, who are you? Solana's co-founder, telling BlackRock what to do, telling Michael Saylor, MicroStrategy, MSTR what to do. Solana's founder. What does Solana bring to the table again? I forgot. Oh, that's right. Solana can't process transactions. That's what Solana brings to the table. Solana failed as a chain 11 times. The last time Solana crashed was 4 hours. I gave up on Solana because I couldn't even send a transaction. I couldn't buy anything because the network is so congested and essentially slows down and freezes and the payments don't go through, because the only thing that's happening on Solana is meme coins, which obviously everybody knows meme coins bring utility. Oh, wait, no, they don't. So a nobody chain and a nobody co-founder, Solana and Solana's co-founder, is telling BlackRock and Michael Saylor what to do and how they should only do this and they can't do that. Sebastian, a Bitcoin developer, also criticized the video. The Bitcoin maxis are not happy. He laminated the lack of response from Bitcoin's core developers to BlackRock's statement. Changing Bitcoin's supply cap would require a hard fork, a radical change to the Bitcoin protocol. This would need majority consensus from miners and node operations. While most in the crypto community doubt this would ever happen, the possibility still remains. Bitcoin's developer, Peter Toad, pointed out that if the community agrees, the supply cap could technically be altered. Bitcoin supply can increase. However, such a change would go against the financial incentives that drive Bitcoin's network. Bitcoin's value relies on its fixed supply, and most participants have a strong interest in preserving that. Yes, obviously, because if they increase the supply of Bitcoin and pollute it, then what's the point of Bitcoin? Because other assets will just outrank it. Other crypto assets are faster, cheaper, more secure, more easier to build on than Bitcoin. So obviously, if they pollute Bitcoin's network with more tokens, what's the point of Bitcoin? Despite this, the mere suggestion that the supply cap could be changed has caused alarms. Some argue that BlackRock's disclaimer was a simple legal protection. So some people in the Bitcoin community are saying, it's okay, calm down. They're saying to the Bitcoin maxis, don't worry about it. Bitcoin, BlackRock only said that because they have to from a legal perspective. Yes, but it still doesn't, you're still not countering in the fact that it can be done. Adam Black, CEO of Blockstream, suggested that the wording was likely required by BlackRock's legal team. Yes, the wording was done by BlackRock's legal team, but you're still not countering in the fact that it can be done. As an institutional investor, BlackRock sells financial products and must take steps to protect itself legally. However, the wording still raised eyebrows in the Bitcoin community. It's nice to see the Bitcoin community, getting tipped from their high horse once in a while. Because the Bitcoin community bashes the rest of the crypto space. The Bitcoin maxis bash XRP, the Bitcoin maxis bash HBAR, Cardano, AVAX, Ethereum, Solana, Chainlink. The Bitcoin maxis always bash any other cryptocurrency and says, Bitcoin first, Bitcoin everything, breathe Bitcoin, eat Bitcoin, sleep Bitcoin. But it's nice to see once in a while that the Bitcoin maxis get tipped from their high horse and come back to reality. BlackRock's Bitcoin ad has sparked a debate about corporate influence over Bitcoin's core principles. The brief disclaimer questioning the fixed supply of Bitcoin has led to concerns that powerful corporations could alter Bitcoin's protocol moving forward if they wanted to. Which just, goes back to the question of, does anybody know who created Bitcoin? Now, moving away from the Bitcoin maxis getting tipped from their high horse to MoneyTap. Let's talk about an actual financial asset that is fast, cheap, and reliable and secure, XRP now. MoneyTap. MoneyTap scales XRP's usage in Japan through partnerships with 6 regional banks. For example, let's go in the past. 2018, Japanese financial services group SBI Holdings disclosed that it would launch a payment application called MoneyTap on Ripple's blockchain technology. According to the announcement, MoneyTap was designed to enable domestic bank customers to engage in instant transactions at all times using QR codes, phone numbers, or bank accounts. And in 2020, fast forward to 2020, it was also reported that the plan of SBI to use MoneyTap in Japanese ATMs. At the time, Zaijin, which was a Japanese national payment clearing platform, only permitted essentially domestic money transfers. Even so, transactions were permitted to occur between 8:30 a.m. and 3:30 p.m. 6 years after its launch, MoneyTap has established itself as one of the most effective payment platforms with millions of users on board, coupled with an incredible number of engagements. So MoneyTap, SBI Holdings, Ripple, Japanese banking system. And this started way back in 2018 until now. Commenting on the journey so far, a renowned analyst identified essentially that has highlighted that several banks, including Shinnon Shinkin Bank and Naigon Bank, have collaborated with SBI to use MoneyTap for international remittance services. So originally, SBI Holdings, Ripple, created essentially MoneyTap. MoneyTap was only supposed to be used for domestic payments, so with payments only inside the country of Japan. Now, MoneyTap is getting prepared for international payments. According to him, essentially, according to the analyst in the report that came out, SBI international remittances has significantly increased, with $13 billion recorded for the year. So $13 billion have went in and out of this payment system, SBI and Ripple. A detailed report. SBI Holdings is a parent co initially. MoneyTap was launched by SBI and Ripple Asia, a JV with Ripple, 40%. In 2019, for example, MoneyTap was incorporated as a separate entity, becoming a wholly owned subsidiary of SBI Holdings. In 2021, Ripple then acquired 33% of this subsidiary. So SBI and Ripple partner. SBI and Ripple partner create MoneyTap. SBI makes MoneyTap a company by itself, which is still operating with Ripple and SBI. Ripple acquires 33% of MoneyTap. Ripple Asia does. And that was only for domestic payments. Now it's getting ready for international payments. And Ripple owns 33% of that company in Japan. Throwing more light on the status of more than 200 shaking banks collaborating for international remittances highlighted that they are much larger, that the 200 banks worldwide that have a connection with this payment system are much larger than the US credit unions serving committees. These banks play an important roles in the Japanese banking industry. Also, the courtship of multiple banks represent a diverse geographical reach. MoneyTap's courtship of 6 banks bodies well. They represent a diverse geographical reach with urban and rural areas. You can check out essentially the PRs and so on, and note that not every bank is primarily interested in remittances, but the app is gaining traction. As of 2021, MoneyTap was supported by several financial institutions in Japan, including Sumoto, SBI Netbank, Daiwa Securities Group Headquarters, Sumoto Mitsui Banking Corporation, Sumoto Mitsui Trust Bank, Agasha Bank, Ogishi Bank, Seven Bank, and the list just goes on. According to essentially the research, Ripple renewed its relationship with SBI by investing in an undisclosed amount in MoneyTap in 2020. A report discloses that the blockchain company was made a significant presence in Japan, with many banks and financial institutions reported to be integrating XRP for various applications. And research experts at Zhou Hang and Emmanuel Silva confirmed this, revealing that Ripple has formed partnerships with up to 80% of the Japanese banking industry. The Japan Virtual and Currency Exchange, Cryptocurrency Exchange Association, the Japan Virtual and Cryptocurrency Exchange Association, has also approved 31 regulated crypto exchanges to list XRP. The fast adoption of crypto and blockchain access major financial institutions is not only happening in Japan. According to reports, BNP Paribas, UBS, and HSBC Bank, who are also working with Ripple, are also exploring and implementing blockchain solutions to streamline operations. Look, I've said this before and I will say it again. 2025 is going to be an incredible year, and moving forward, it should get better under a Trump presidency, because Trump is not only going to fix the American industry, but Trump is going to fix the entire world. And the markets will be massive for the crypto space. The positiveness that will bring for the crypto space is incredible. With his regulations, his policies, new CFTC chairman, new SEC chairman, and essentially corporations and banks in America getting involved, and America becoming a capital hub, and the world will follow. But also consider this fact, that the majority of these crypto projects, companies like Ripple, for example, started doing contracts back in 2018, 2017, 2016. And those contracts they ended up doing in 2016 or 2017. And fast forward to now, 2024, and going into 2025, they're getting ready to launch. So, we're going into 2025, where America, which hated crypto, is about to become the hub of crypto. With institutions, with banks, regulations, new SEC chairman, new CFTC chairman, and everything that comes with it. And America will lead the world into a digital future under a Trump presidency. And crypto projects like Ripple, who commenced those contracts back in 2016, fast forward 2024, now 2025, those companies are getting ready to launch. So not only is the amount of money that's going to be coming to the table to legitimate crypto projects, just because America is going full crypto, and the world will follow their footsteps. As I said previously before, so Korea, South Korea, Hong Kong, Japan, Singapore, Saudi Arabia, Kuwait, Bahrain, United Arab Emirates, the EU, Latin American countries, Canada, the UK, everybody is about to be following America's footsteps. And they've made it very clear they're going to follow America's footsteps. Every single one of them said we're following Trump's footsteps into a digital future. So adding all of that, the amount of money that's going to come to the table, and factoring in all those contracts that were happening in 2016 and now getting ready to launch, just picture what's going to happen. Honestly, if you are inside of this part of the crypto space, if you're at this stage of the crypto space, you have an incredible future ahead of yourself, only if you positioned yourself correctly inside the crypto space all this time, and you didn't follow the noise or the trend of meme coins and D pins and C pins and cool pins and whatever pins there is, and you follow the correct path, the path that institutions will take when they bring their money to the table under regulations, when the banks bring their money to the table under regulations, and you follow the correct path, which is the financial projects inside the crypto space, the ones that suffered the most throughout the years, were blamed the most, were battered the most, were made fun of the most. Those are the projects that are going to flip the table. XRP is going to flip. Not saying overnight, over time. All these projects, the projects that were made fun of, XRP, XLM, XDC, H4, all these financial projects that were made fun of, throughout all these years, they were silent and building and building and building. And now we're getting close to the regulations. And the world is going digital because they're following Trump's footsteps. And all those contracts they did back in 2016, and everybody inside the crypto space said, who cares about contracts? Who cares if Ripple made another contract because XRP is not moving? All those people who said every time XRP comes out, they have another bank signed, but the price doesn't move. All those people are going to suffer the most. All the bashing they did, they're going to feel the pain as we go throughout the years. Because all those contracts are going to get activated one by one under regulations. So, all good things must come to an end. All good things must come to an end, and they have now. Don't look at the short-term picture. Look at the long-term picture. It's looking incredibly positive. This was the CMF Live. It stands for Crypto Miles Family. And on this live, you can tune in Monday to Friday, and today being Friday, essentially, which means if you want to tune in for the next episode, tune in Monday again. And this was episode 228 of the CMF Live. And in this live, I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. And I give you my perspective on every news that I share. And we do Q&As on this live as well, which means you give the questions, I give the answers inside the comment section. So share, follow, subscribe, comment, like, retweet if you already haven't. If you're watching us on YouTube, subscribe if you already haven't, and drop a comment outside of it, drop a like. If you watch us on X, retweet, share, comment, like, subscribe if you already haven't. Let's go, CMF. And this was episode 228 of the CMF Live. Episode 228 this was. Incredible that we're on episode 228. Now I'll be seeing everybody on Monday, same timing as usual, 11:25 p.m. because this live is only Monday to Friday. But let's go to the comment section before we call it an end. Excuse me, we were here. Outstanding, all clickbait, facts. Nice one, Miles. Let's go, Ian. Bitcoin maxis though. As you said before, Miles, Bitcoin is a pillar, pretty much. Is money tap XDP? Yes. And you know who is involved at the start? Elon, pretty much. Because they took the technology from PayPal originally. That's true as well. That's very true. Thank God Trump won, Crypto Miles. Let's go. Absolutely. Thank God Trump won. And thanks for an amazing live, brother. Let's go, Camel. See you tomorrow sometime as usual. Tomorrow sometimes. See you on Monday, same timing as usual. Lol, these fools are going to get the upside down pineapple. Facts, Thomas. Good night, Miles. See you tomorrow. No, see you Monday. Mike, see you Monday, same timing as usual. Thank you for all you do every night and every day and all night. Take good care, Miles and CMF. Kim, see you Monday, same timing as usual. Thanks for sharing your knowledge, brother Miles. Good night, Comatose. See you Monday, same timing as usual. Great show, Miles. Thanks again. Good night, everyone. Bull XLP, see you Monday, same time as usual. Good night, Miles and family. Great live. Many thanks. Many facts. Thanks, and see you on Monday. See you on Monday, Ian, brother. Good night, Miles and everyone. Stormy, see you on Monday, same time as usual. Thanks, Miles. Let's go. Thanks, Miles. Tony, see you on Monday, same time as usual as well. Okay, see you Monday. Mike, see you Monday, same time as usual as well. Thanks, Legend. Thanks for your insights. Night and day, CMF. Take care, guys. Let's go, Shelly. See you on Monday as well. Good night. Thank you. Let's go, CMF. JP, see you on Monday, same time as usual as well. Miles, outstanding program. Let's go, Scott. See you Monday, same time as usual. Bye, Miles. Thank you. Millie, let's go. See you on Monday as well. Same timing as usual. Brilliant live as usual, Miles. Thank you. Joe, see you on Monday, same time as usual as well. Thank you, Miles. Have a great weekend. All Lena, see you on Monday, same time as usual as well. Thanks again, Miles. Take care of CMF. Ghost Runner, see you tomorrow. See you on Monday, same time as usual as well. Thanks, Miles, and keep doing what you do. Let's go, Scott. See you Monday, same time as usual as well. Nice one, Miles. See you. Zach, see you on Monday, same time as usual as well. I will be seeing everybody on Monday, same time as usual, 11:25 p.m. UK time onwards. If you haven't already, follow, subscribe, retweet, like, share, comment. Join the X communities page of this live on X, Crypto Miles Family Lounge, and join the Telegram group if you already haven't. If you can't find it, direct message me. I'll see everybody on Monday, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. CMF, I'll see everybody Monday, same time as usual. Have a great day or a good night, depending on where you're around the world. See you on Monday.